Hey, good morning. This is Mayor Valensky with Driving Markets. Let's just get dressed properly for the video. Okay, right, let's go. So the usual caveats: it's not investment advice, not financial advice. It's pure opinion only for media publication. So hopefully you get that right. And anything you make is your money, anything you lose is your money, and hopefully you make money and whatever. Anyhow, so let's move on. So yesterday the markets had the biggest fall since June 2020. Now what happened was, and I've been saying all along, sell the markets, sell the markets. From January this year, the markets have just been too high, and they are too high at the moment. They're just simply too high. So they've really been a short. And then from end of June, there was markets began to rally, and they've moved up significantly since June. In fact, there was even a theory or thought that the interest rate cycle has come to an end, inflation's under control, and in fact, the general consumer in the street, after doing several surveys, believed, in the States this is, that inflation next year will be lower than it is today. Well, that's actually not going to happen. Inflation next year in the States is going to be much higher than it is today, probably running at around 13-14%, even higher. So that's what's happened to the equity markets since June. They've gone up, and there's been some very, very positive feeling about, a lot of confidence. In fact, when I stated in August, I said specifically that August the markets will probably continue going up, and in the first week of September they also continued rising, with good rises on Thursday, Friday, and effectively on Monday, after some of the Fed members indicated that interest rates will probably be capped. However, inflation came out yesterday in the States with the Consumer Price Index, the CPI, and it did go down. So I did state that I expect inflation to be lower than the previous month, and it was. It did come in. Last month it was 8.5, and it came in at 8.3, which was lower effectively. And normally you'd expect the markets to go up on the back of that, because that's quite positive. However, they were expecting 8.1. As a result of expecting 8.1, and it came in at 8.3, all of a sudden there was a massive sell-off, and the markets just sold off. The Dow, the S&P, the Nasdaq, the DAX, the FTSE, all just sold off completely. The FTSE was down 1.1%. We won't even go into currencies yet. We'll discuss currencies in a second. They were also hammered completely across the board, and the markets did not stop being sold off. So what actually happened is there were a lot of froth on the market from going back to June, July, August, and therefore the market was ripe for a big sell-off, but not as big as it was yesterday. I didn't expect that. The Dow fell nearly 1,300 points. Again, the biggest fall since June 2020. Now, effectively, what that means is that the Dow has now gone close to back into bear territory. So the volatility in the markets is all based around the fears of inflation and interest rates, and we can't seem to leave those topics. Those are the continuous topics that are on the agenda on a daily basis. The fears of inflation and interest rates. Inflation is there, it's bubbling along. What was frightening yesterday is that odds actually come down continuously from, say, March this year, after the Russian invasion of Ukraine, where it spiked. It's consistently come down since then. That's not due to Joe Biden or Kamala Harris, because they want to take all the credit. It's nothing to do with Joe Biden, Kamala Harris. It's purely economic supply and demand and geopolitical factors, where there is a lot of input from OPEC and other factors that have brought oil down. Now, if oil's come down and came down again in August, and oil is a major constituent when it comes to a measure of inflation, if that's come down, you would have expected inflation to either reach the target that analysts were expecting, 8.1, or even lower. But what frightened the market is that not only has oil come down to significantly lower levels than it was back in February, what's happened is that inflation has gone up. So if oil had been higher now, then inflation would have been around about 10, 11, 12%. And that's what's really effectively frightened the financial markets, that if oil has come down, yet inflation has still gone up, then they are concerned that when oil does go up, which it will go up, then inflation is going to be much higher. So as I've said again from the beginning of the year, real inflation is running in the West at around about, the moment, at around about 14-15%. The declared inflation, declared inflation, not invasion, the declared inflation from the statistics office, whether it's the Labour Department in the States or in the UK, is only a minimum. It's only a basket of goods, and that basket of goods is, even though maybe considered broad, it's not broad enough to include everything, and therefore inflation is going up and will continue going up in the foreseeable future. Well into 2023, you're going to have inflation rising as the supply chain cannot be repaired. It's still faulty, and China has further lockdowns. Now, moving into a couple of other things, if we look at the currencies, the dollar shot up yesterday. Now you've got to look at dollar yen. I mean, the dollar yen, most people don't trade dollar yen, but it's a good guide. Where yen's got zero interest rate policy, and the US has a higher interest rate policy. The dollar yen is running at 145, which is huge. It's a massive rise. And also look at pound. Look at cable. Pound dollar. Pound dollar was hammered yesterday. When the numbers came out, the pound just fell off the floor. Not because the pound is particularly weak. It is weak. It's because the dollar is so strong, and as rates now go up in the States, and they're going to go up by 75 basis points now in September when the FOMC meet up, then that is just going to push the dollar even higher. So you're going to have continuous rate rises in the States over the next 12 months. By the end of this year, I expect interest rates in the States to be at 4%. You may even get a 100 basis point increase in rates in the States. It's going to be unlikely, but there is a chance of that. The moment 75 basis points is odds-on favoured. In the UK, there was a delay on the MPC until next week, and they're also probably going to increase interest rates by 75 basis points in the UK, as well as in Europe. They're also going to have another rate increase, 75 basis points. Oil will continue creeping up. Oil's creeped up a little bit, continue creeping up. Gold got hammered yesterday. Gold got absolutely sank once the inflation numbers came out. Overall, there is now a concern of global recession, and that is sending more fears within the financial markets. That is a quick recap on driving markets. So again, more volatility, likelihood that markets will continue falling. Bitcoin fell 10%. By the way, those who are Bitcoin or crypto traders fell 10%. Came off from 22,500 all the way down to 20,300, and you can expect a lot more volatility. This is Meir Velensky with Driving Markets. Have a good day.